Well, Mary, welcome to the show. Thank you so much for joining us via Zoom.
Oh, I'm glad to be here. Thank you for asking me.
Yeah, so I know probably a lot of people are very familiar with you, but for the small segment of the population that aren't aware of you, do you mind giving us like the 30, 60-second bio and like how you got into real estate and how you got to where you are today in Asheville?
Yes. So I have been in Asheville for almost 20 years now, been working primarily, my focus is green buildings, which I like to do, but I'm also a real estate investor, and I've been investing in the local Asheville area for about 20 years. And I just enjoy, if it's real estate, I love it.
Yeah. Well, yeah, no, and that's why we're having you on the show. I know you've been doing these like market segments and updates, and also I know you're trying to get to some subscribers on your YouTube channel. So what is that? So somebody can click over there right away as they listen in.
Yes. So lovethegreen.org. If you go to that website, then you can just hit the YouTube channel, and that's the easiest way to get there.
Yeah, and we'll include the links as well. So I know during this whole, like the last 3 or 4 months has been crazy for everybody. Do you mind kind of giving us a quick update as far as what you were doing, when this whole coronavirus thing started? And then did you make any changes or pivots? What did you see? What did you feel? Did it impact your business, et cetera? You don't have to go in super detail unless there's something specific that you want to share.
Yes. So the first quarter, I was just gearing up to have the best year ever. Everything was going great. Our sales projections just was climbing. And then when the virus pandemic hit, everything went to a standstill, especially for realtors. The first 3 weeks, we were not considered essential work. And then after that, we were. So it was much better. So when I get ready to review our whole entire quarter, as well as the half of the year, which is great where we are now to look, we're going to see some of the impact of the month of March, where essentially realtors were not working. We were just at a standstill. I think the biggest change has been a jump on virtual showings. Something I had already been doing because of the environmental aspect. I like to have all of that. But it's been very helpful because we've seen more and more realtors now do Matterport, the 3D, all for the listings. And we'll get into that a little bit about how, well, I can just mention that statistic right now. It's really interesting is within 90 days, we have statistics showing that buyers are purchasing homes primarily and sometimes only based on the virtual showings. So that is incredible. That's nationwide. It's gone up 9%.
Yeah, we were talking with Glenn from Rent to Home and Al from Alpha Real Estate as far as rentals, and they're sharing that there's also a lot of just people who are making the decision to rent a house off of video walkthroughs, virtual showings, etc. And it's interesting to see how quick of a change that happened, right? Like, I don't know if I'd be ready to make that decision from a do you think you'd feel comfortable making like that big of a lifestyle decision without ever seeing like the house yourself? Like, I understand doing like 80% of the work virtually. That makes sense, but going 100%, like, that's a leap of faith. I don't know if I'd be ready to take it.
Well, let me just tell you. So the first rental property that I bought in Asheville was when I was living in California, and I purchased it without seeing it.
But that's different, right? Like if you're not living there, like you can buy based on numbers, and that's like a little different, right?
A little different, but it's sort of hard. I'm like, that was pretty stupid. Because we didn't have, way back then, we didn't have virtual tours. It was just looking at a picture and saying, oh, okay, I guess that works. I did rely on my inspectors to help me. But so I don't think it's that big of jump for what we have in this day and age. I mean, really, with the 3D, you can walk through, you can check the angles, you can see everything. It's a totally different
it's incredible, isn't it?
It is. It's love it. Personally, I really like it because now I can take my clients, we sit down on Zoom together and do the virtual tour and immediately determine whether it's going to work for them to go in or not.
Yeah, you can look at how many houses an hour that way, right? And everybody's just so comfortable and everything. Yeah, that's got to be good. Let's talk about houses and numbers and what's happening here. And I know you mentioned you got some national information as well. Before we dig into that, though, do you, if you were to summarize just in your own words and your own experience what Q2 looked like for you, how would you describe it from just like a non-numeric perspective, just like emotional or like gut feel? Like, how did it feel?
Scary. Mm-hmm. It was scary. It was the first time I'm used to real estate cycles.
Yeah.
And, usually there's great opportunities in downturns, but I think that this was scary because we had never experienced anything like this on a world level.
Right.
That's where, and we still don't know. It's the uncertainty on a world level.
Yeah, it still feels early.
Mm-hmm. It's definitely early. Definitely early. And in the real estate, we always look at our statistics in the arrears. So mm-hmm. We haven't seen everything yet.
Yeah, no, agreed. But yeah, well, let's get into the numbers. How, I know you said you got some numbers you wanted to share with us, so feel free to go ahead and pull that up.
Okay.
While you're pulling that up, I know you said you were doing the virtual tours and whatnot already. Has there been anything else that you've kind of added to your business, or maybe that you've taken out of your business, things that you were doing before, you're not doing now, or things you started doing?
So, let me just 1 second.
Oh, sorry. Yeah, go.
Okay. One of the things that's different in our business, I've got to say, for me, my business, I always had my clients do drive-bys, mm-hmm. and I always had my clients pre-approved. What is interesting is now that that's a requirement because of our COVID amendment that we have made for the real estate, is to see that every company and every realtor, they're doing that, and it really makes the quality of the buyers that are coming into the houses a lot stronger, which I really like that. So we know that we have more serious people, and I think that's a huge thing. And I don't think we're going to change. To me, that's ironically, I think through the Real Estate Realtors Association nationwide, it's brought a level of professionalism that we made. I don't think it's going to change. More. We're going to have to take more precautions from now on in general, mm-hmm. and have less people traveling through houses. That's the bottom line. Yeah, mm-hmm. Yeah. Okay, so am I sharing? No, I'm not.
No, not yet.
All right. Let me find where. All right, now I am. All right.
I'm gonna just make you pretty small on the screen here for the Zoom recording. If anybody's watching this on YouTube or Facebook, if you're listening in, then you can watch everything we're talking about. You guys can watch the recording on YouTube or Facebook as well, or just check out the blog. But go for it, Mary.
Okay, so Rodrigo, as you know, I always like to look at the big picture mm-hmm. in our Asheville region, which includes, of course, Asheville, Buncombe County, Henderson County, but all of the surrounding Western North Carolina counties, mm-hmm. because typically those surrounding counties always have less sales in general, but they follow their percentage rates similar to what our local Buncombe County and Henderson County do.
Okay.
So I always like to look at that together and see, especially as investors, we are looking beyond Buncombe County and Henderson County now to see where the good deals are, because we know that more and more people are expanding out to the surrounding counties to find homes that are affordable.
Right.
So we have our half of a year in now. So our statistics on this is not just a quarter, but it's from the January 1.
Oh, this is a Q1 and Q2.
Q1 and
Q2.
Okay,
cool. Great.
That we're going to do some. Right now, though, this is Q2. So this is indicating what happened from when COVID started and to where we are. Okay. And across the board, what we saw was a 39% drop of sales.
I see that. Is that just for May? I see that it's highlighted May 2019. So,
no, this is it. It's not just for May, but what it went all the way back into they were for that. Yeah, I actually need to take that off because it's not just for May.
Okay.
But what's interesting. I use May because that's where we were seeing some of the changes of an increase from what happened with COVID. But so these are quarters, though, based off of the whole entire quarter. So the pending contracts are going up across the region. So that's, we were affected, but we're already seeing since May, we're seeing contracts go up. Of pending.
And so for anybody who's not familiar with the term pending contracts, do you mind giving us the quick definition?
Contracts, active listings that have offers on them that have been accepted and have not yet closed.
Perfect. Thank you.
So Buncombe County, though, is very interesting to see from the point since COVID hit, we went down 47, almost 50% from year to year.
Wow. As far as closed sales?
As far as closed sales. Now,
wow.
I know, right? You think of that? But here's part of what happened with that, and we'll talk about this more in a little bit.
Yeah.
But part of what happened was the lack of listings.
It just wasn't inventory?
It just wasn't inventory. So that's why sales went down. It wasn't just a factor of COVID and those houses were out there and no one was buying. They were buying, but there were not new listings coming on.
And can you speculate on that as far as why that happened?
Yeah. When this happened to me personally, I had several people that just put their listings on hold because they were unsure what was going to happen, especially my April listings, just totally, let's put those all on hold. And so this is an indicator of that for sure, right? The sales in April were down because there just weren't anything to find. And the other part with that is even though there's decline of sales, there were lack of inventory always means that the prices go up, right? So
I think people have been I know I've talked to some people just like in conversation, they're like, how is it that the prices are holding or even going up during this time? It's like, well, there's just not enough houses. Like regardless of the environment, there's not enough houses and there's willing buyers, like it's just going to naturally push things up.
Yeah. And I think there's definitely a thought right now, and this is what I would tell, if you're a buyer, buy now. If you can find a house, buy it. Yeah. And I would tell you that if you are a investor and you find a house that you like and you think, oh, it's a little too high, buy it now. Because it's only going to get higher.
You think?
Absolutely.
Well, we'll get into predictions then here in a moment. Yeah. And I'm very interested in hearing your thoughts on that. But yeah, let's continue with kind of where we're at right now.
So Henderson County, its decline was 35%. And That one of the reasons is because there was a larger inventory in Henderson.
Mm-hmm.
So that's very reflective of the fact that it was less. And year to date, over our greater Asheville area, the decline was 43%. And that, again, is because we're talking about all of those other counties, which just, they just stopped. I mean, Jackson County only had 12 sales the entire second quarter.
Wow.
Yeah.
That's crazy.
Well, you know, Jackson County is very remote, so they actually closed off essentially the entire county for the month of April.
Yeah, they were definitely doing like roadblocks is what I heard, right?
Yeah, right. So, of course, their sales went down.
Yep.
Yeah. But here, this is historical pricing for the medium homes. Okay. In Buncombe County, you just see it's going up. The line's going up.
And so the gray one, I see it says entire Canopy MLS area. Is that the MSA for Asheville, or what does Canopy MLS?
Yes. So cover? All of my statistics are coming from the Canopy MLS. So the blue is Buncombe County is the blue, and the Canopy is the entire. And that's a good because the MLS Canopy expands into Charlotte, Raleigh. They pull up all these other statistics that they come from. Wow. And that is my source, is the Canopy MLS. So we had seen, this is the interesting thing, we'd seen this trend slowly increasing in the median home sales price in Buncombe County and in Henderson County, slowly increasing, basically due to our housing shortage. Since the COVID instance, it has increased by much more. You know, I'm going 10,000 in each different price range. If it's the 400s, if it's the 500s, it's just making 10,000 jumps, and that is huge. Yeah, for a buyer. It can really put a buyer out of the opportunity of purchasing a home very quickly. And that is one of the reasons why I'm saying if you're going to buy now, because this trend is going to continue. Okay. Yeah.
Wow.
It's a good thing we bought when we did, isn't it?
Yeah, no, it's so I'll share a couple of things there, you know. So I noticed that we had a very, very slow Q2. We had a couple of things that we closed on and were able to work, you know, but they're mostly like long-term, you know, holds that we ended up doing. So nothing like short-term with one exception. And then it was just like a dead stop. And the deals that we did close were all things that had started coming together pre-COVID, and it kind of was just carried it over. And it's not until, you know, July that we, you know, last 2 weeks of June is when it picked up for us as far as, you know, like level of appointments going on, you know, the amount of offers that were submitted, conversations that actually started to happen. And then we got some momentum over the last 2 weeks of June that, you know, looks and feels much better than it did mid-May. So.
Yeah, absolutely. And my past 2 weeks have been just crazy with buyers. But again, one of the issues with the buyers is they're not finding homes. Right. Our inventory is just so low. And this is our housing supply inventory right now. Okay. All right. So this is where we are in our Asheville region. Some quick facts. Let's see. Yeah, I get it up to know. Our quick facts is the price range that's the strongest is in that 300s. You know, last year we were talking about, oh my goodness, 250s is getting high for people for medium home prices. Now we're looking at, you know, really statistically it says 287, but what we're really seeing is low threes up to 325. So,
Yeah, that seems high.
yeah, it does seem high, but that again, and you know this, houses that are under 275 are usually in very, very bad condition.
Yeah, if you can put out a product right now in the sub 250 market that's in really good shape, like the numbers I've looked at based on a couple of deals that we're looking at on our end, it's pretty encouraging as far as the speed and as far as days on market and close to list price ratio. Like they're good numbers.
Well, look at this on where it says days on market until sale 4.
Yeah.
Right?
That's fast.
That's fast. And that's so true. I mean, we are definitely anything that's under 325, we're seeing multiple offers on.
Wow.
So, and that's multiple offers regardless of condition.
Mm-hmm.
So,
yeah.
if you're an investor and you could do a very quick rehab and be able to make the numbers work for you to have something under 325, it would be great to do that right now. You just need that inventory.
Right.
We really have to have it out
People
there.
are asking for it.
Absolutely. Absolutely. And we just really don't have that much of I'm going to drop this one out. We just don't have that much of an inventory in any sales price area.
Mm-hmm.
And used to, we would think that if it was 700 and above, people could pretty much pick whatever they want. But there's not houses out there in that price range either. They're designed to be new construction and have not been built. So people that are looking for homes in any price range are really struggling.
Wow.
So now, can you see I'm sharing the Realtors Confidence Index?
I see it from May 2020.
Okay. So on the national viewpoint, I think it's really important. Locally here, what happens in Florida affects us quite often as far as real estate goes, because we get a lot of people, when they get frustrated in Florida, they come here. So as well as what's going on in the north, we get quite a few people. We're the halfback state, right?
Yeah.
Yeah. Halfway to Florida or halfway back to the north. So
yeah, you go too far south and you're like, whoa, come back a little bit.
So it's really important to see what the rest of the nation is thinking that's going to be happening. And the Realtors Index is a good indicator for us to examine that. And so National Association of Realtors, NAR, takes what they usually do is they survey about 1,000 realtors that are really active in the business, and they break it down into different areas of what they are: condos, first-time homeowners, all of that. And then this is all accumulated together.
Wow.
So let me see if I can get this big enough.
Do you see that little arrow on the right side of your screen? If you move your mouse over a little bit to your right, it'll collapse that menu there.
Yes. Thanks.
Yeah, right there.
That's right.
Mm-hmm.
I knew that, just wasn't getting it. Okay.
Perfect.
Yes. So remember, this is an outlook of, I'm just going to jump to the 12 months because when we're talking predictions, we have to go a year out at this point. Used to, before COVID, I love to go 90 days out because that would indicate from a time a house went on the market and then the 45 to 60 days of sale until it was actually sold. But now we really need to look out for a whole year because it's harder to predict with the unknowns of COVID. And so 16% think that we're going to see a overall real estate fall of about 20%, which is not bad.
Yeah.
If you think nationwide, if our real estate market falls 20%, that's not bad considering what we saw, that almost 50% of sales stopped in our area the first 3 months, right? Mm-hmm. So to me, it's more of a dip than our normal real estate cycles, but not as bad as our last quarter evidence showed us. So that means that overall, excuse me, overall, they feel like it's going to be pretty good. And then you look at this. So this is what's really interesting, is where we go to. 24% of the national realtors actually think that in the next 12 months, the real estate market is going to increase between 1% to 5%.
Are you in that category? Or where would you put yourself on this? Would it fall, rise?
So I think for us locally, we're going to continue to see a rise, provided, this is the caveat for us locally, provided our builders continue to actually build, not just do proposals. If people have to wait a year to get their house, that's one of the things that we're seeing. Our buyers are not willing to wait for a house to be built. They're moving on somewhere else. So as long as that we can get that continued, and our building industry is just bursting right now. They're putting up homes all over the place as fast as they can. I just had somebody, a builder, purchased 10 acres of land, and as soon as he closes on it, he's going to break 7 lots.
Wow.
I mean, he's just like, I'm going to do all the foundations at one time, getting it. And that's not, we're not tract builders here in our area. So, so I do think as long as we have new inventory, we'll increase. But there is a little bit of a fear that as the price continues to climb, that people will go to other states where they can buy a similar house, a good $25,000, $30,000 less. All right. So let's see. This is interesting of a prediction of what's going to happen with the seller's market, though, in this blue. And what the idea is, they think that the sellers, our listings is going to become, is it going to increase, or is it going to be weak, or is it going to be stable? So if you look at North Carolina, the majority of realtors in North Carolina think that our upcoming listings over the next year is going to be weak.
And weak as far as there's just not going to be a lot of listings?
There's not going to be a lot of listings.
Okay. So listing volume is going down then, according to
the volume is going down, which is going to make the prices go up. That is one of the biggest reasons I'm saying, if you're going to buy now. And, as a real estate investor, I bought a few places that were in really good shape at the height before, in like 2004. But I didn't care, because I knew that maybe the numbers didn't work for me to rent them that year, but they would the following years, and I wouldn't have to do as much work on them, right? So, because I knew it's just going to constantly go up, and that's where we are again. Yeah,
but appreciation is like a little bit of a dicey thing to buy on, though, isn't it? Like, I mean, if you would have bought based on appreciation in 2007, like, you would not be happy. You would not be feeling very good.
I would say that's true in a lot of different areas, but I do not think that holds true for Asheville.
Okay.
I just think that, now that's provided you're doing a long-term hold.
Right. Yeah. Not as a flip. Like, if you're buying it, planning to own it for 10 years minimum, I guess.
So our plan was a 5-year plan.
Okay.
And we actually still hold that same piece of property.
So it evolved into a long term.
Really nice.
Yeah.
So at this point, it's a really good thing to think about as far as an investor with rental. I always worked on 5-year plans.
Yeah.
Now I'm going to do 10-year plans.
I would
just run my numbers on 10 years, just because of the unknown.
I know we're deviating, but I was told by when I was very early in the game, it's like if you're buying a rental, you shouldn't expect to make much money at all until like year 5, like years 1 through 5. It's like the rental's building itself up, like you're fixing a couple of things, you're working through like whatever, just things are going to come up. And then once you get past that 5-year range, you've owned it long enough, it starts carrying itself a lot better. Not that you can't make, or you shouldn't shoot to make, really good returns right away, but you want to have that long-term perspective a little bit. Yes.
And, my first mentor that told me on real estate investing, his philosophy was always, you buy and hold until you die.
Yeah. Don't sell ever.
Ever. That was his philosophy, Mm-hmm. And, if you're looking at it that way, then even 10 years is fine. You're like, oh yeah, if I can still make money, a little bit of money.
Right. Yeah. If you cash flow day 1, then then you're in good shape probably in year 10. Yeah.
Yeah.
Well, sorry. I know I totally got us off point. So we can come back to the market conditions.
Yes. Let's go back to the market conditions of what we're seeing out there. This is on the national level mm-hmm. right now, which I always think is good, is who are our buyers, who are our sellers. First-time homeowners across the nation, 34%. That's a big amount. We had, for a little period, that number was much lower. Because really our millennials were not wanting to buy mm-hmm. homes. Now we're seeing, this is a really weird trend, sort of a sidebar, but I'm getting senior citizens buying for the first time.
Huh.
They had some senior citizens who had lived on the concept of, I'd rather have a very nice rental, luxury condo situation, are feeling the need to be in their own home that they can control. And because of the pandemic. Yeah. So I think that's showing up nationwide too, with their statistics of our first-time home buyers going up. Mm-hmm. But the problem is first-time home buyers are really being hit hard with what our median home price is now.
And their qualifications, are they still high? Like I know at the very, April, we talked with Chase Hanks over at Movement Mortgage, and she was just talking about how, credit scores needed to be higher. You might need more money down, et cetera. Are you still seeing the same?
Well, that always depends on which lender you're using, right?
Right. Well, I mean, I guess, a broad stroke, generally speaking, is it harder to get the same type of loan now than it was in February, January from the buyers that you're working with?
Because here's the thing. It most certainly because of the uncertainty of employment.
Mm-hmm. Right.
Mm-hmm. So, and that's interesting because now that we're talking, maybe that's what's going on with senior citizens as well. Those senior citizens tend to have more money.
Yeah, they're going to have more liquidity in theory.
Yeah. So maybe that's why they're buying now, because it's a little easier for them in that sense.
Interesting.
I hadn't thought about that. So what was the status of our homeowners before they bought? 50% lived in the rental apartments or a house, which is typical of what we've got. We're seeing a little bit more of an increase that they have lived with parents or friends, mm-hmm. and I expect that to continue. I know from our property management we had a few tenants who said, hey, I'm going to go back and I'm going to go live with my family during this COVID. And I think that's going to be true for the next year.
Yeah. Lots of changes.
Lots of changes. There's a lot to think about when you really deal with real estate.
Yeah.
There's so much to think about. Our cash sales locally, what I noticed is that our cash sales have actually declined. You probably see that a lot too, right?
Mm-hmm. Yeah, that's kind of been, that's kind of what I've been seeing. I have nothing to back that up other than just my gut feel and just like picking things up on conversation. But that's kind of what I've been feeling too.
And I think that's because the interest rates are so friggin' low.
Well, yeah, I think A, and then B is kind of, there's just not as many options, right? Like even if you want to buy right now, like you might not be able to find something. And so it's just naturally going to bring, and then if, as an investor side of things, like you might be being a little bit more cautious right now, right? Like the house you might have bought at, I don't know, 80% market value, you might not be willing to pay 80%. You might want to be at 60% now. And then it's just going to naturally, take opportunities off the table if you're looking to be more conservative, which makes a lot of sense right now.
Absolutely. If it's like, and you probably are doing this, like I have put all of rehab projects on hold. I'm not buying anything for a rehab project. Because I'm very conservative and I'm a conservative investor anyway.
Yeah.
But no, nothing on that.
Well, I want to come back to that. I want to come back to that because that is a very good. Like, I'm going to just jot that down because I do have a project that we're closing on at the end of this month, and been doing a pretty big rehab on a rental that we picked up, and so I'd love to get some pushback from you on why that may or may not have been a good decision.
Okay, we'll come back to that one.
Yeah.
Then. Yeah. Statistically, though, our original, I don't know where that's really, so this is nationwide. This is something that's really interesting. In a lot of the hot markets, they were putting, before COVID came on, it was just pretty much, you could put whatever price you wanted and somebody would buy the house. Right? So they didn't really care about what that list price was. Realtors would just say, if the seller wanted them to list it at something, they would just do it, and somebody would buy it. Yeah. Those homes, this is a really good indicator because that's one of my pet peeves. I like to have a house priced right. I don't like to just throw a sticker price up there. So this 48% of the original. The list price, these were like in Las Vegas and in some California and all. They had prices totally way out of line
with the market.
They got hit hard. But this with real estate, that's not actually a loss because they would have never gotten that amount anyway. Right?
Yeah. Just because you ask for something doesn't mean it's worth that.
Right.
Not even close. Not
even close. And what's nice now is we have had a market adjustment across the nation. I think one of the reasons that Buncombe County does not always is not as affected as bad as a lot of the other nations is because we don't just throw up any price. So we have a lot of good realtors that look at what the current market is, and maybe they'll go a little bit higher, but not significantly.
Yeah.
So our bubble doesn't burst as hard as
it's not as dramatic. Yeah.
Yeah. As Las Vegas thinks, right?
I just want to be respectful of time, Mary. I don't know how you are doing on time, but I do want to also make sure we leave some time to just talk about like what may happen. So
okay, let's do that because the rest of this, I'm going to throw this up on my blog and on my YouTube site with statistics. I really could talk. I like statistics.
No, I know we could. I mean, we could spend a whole day, just talking about the numbers. I do want to like leave some time for opinion on what is happening.
Yes. Yeah.
All right.
Yes. Okay. So
let me just switch this up a little bit. Okay. Perfect.
So Buncombe and Henderson County those are the two counties that I really focus on when I talk about our statistics and what's happening, because that's our major local area. So I had a couple of questions that I wanted to start with or to go to, but let's start with this, right? So you feel like it's a strong market and you're saying, hey, if you'd encourage people to buy, but then you're like, I wouldn't buy a rehab right now. So how are both of those statements true, I guess? Okay, that's good. So if you're looking to live in our area and that's your reason for purchasing, you just do it because all trending indicators are that the house prices are just going to continue to go up and that our inventory is continuing to go down. Right. So that's why I said, if you want to live here, you want to buy there now. Also, if you want to hold the property long term, I think it's good to buy now too, because again, inventory is going to go down, prices are going to go up. Flipping, I would be a little careful. And the reason I say that, so typically you purchase a house, and from the time you purchase a house, you've got minimum of 90 days before it sells. Yeah. That would be like that's if you're like super fast. That's like if you only have to paint the house, right? Yeah, right, yeah. All right. So, but typically it's 90 days to get it ready to go to market. And then it's another 90 daes before it sells. By the time you close on it and everything. Right. So, typically I give myself 6 months for a rehab, right? Yeah. And run my numbers 6 months. 6 months, it would be putting me in the winter, right at December. Unknown what's going to happen with the virus this winter. So will I have unknown what's going to happen with the economy? I would be leery when I'm looking 6 months out if we have another shutdown at all, then our market just stops like it did in March, then I'm holding property. Yeah. We talked about the fact that there wasn't a lot of inventory. So I'll share my thoughts. I think that if you're in a lower price range market, let's call it like definitely sub 200, I think you're going to be all day long. Probably okay, right? I mean, it's not a certainty, but I think like I wouldn't freeze, right? If I'm putting out a rehabbed house, I would say like 175. I think right now I would feel comfortable with moving forward. I think sub 250, I'd still feel good. My breaking point as far as where I would kind of start being like, oof, I don't think I'd do that project necessarily is in the 250 plus range right now. And I think that's just a comfort level thing. I know there's other people I've talked to who are their comfort levels at the 350 mark, and I think it just depends, but it is interesting to talk to different folks and see like, that's the tipping point. Like I'm not going above that as far as numbers or expectations. Yeah. And that really depends on individual investors and for me, I need to make a really nice profit for it to be worth my time. And so my numbers are really, that's why I said I'm very conservative when you talk to other people, because my numbers are really different at this point in my career as an investor. If you are newer and just starting, I mean, a lot of investors figure if they make 10,000, that's great. For a new, right? Let's shake our heads at that. Yeah, I mean, if you knew it was going to happen every single time, like maybe, but like you definitely don't want to be running your numbers and hoping for a $10,000 profit. No. That's dicey.
Well, yeah, I just wanted to have that because I think it is interesting. You know, a lot of people want to invest here, buy here, and so it's just an interesting conversation. It's like, well, at what price points, you know, what comfort levels are at different price points. But let's kind of wrap it up with this. So what's going to happen? What happens? Looking into the crystal ball, how do you? I mean, I know we've talked about what has happened. Thank you. That was like in-depth information, which was great, by the way. But what do you do with that? How are you projecting? What are you doing in your business? How are you approaching things moving forward over the, say, next 6 months?
So if you want to list now. It is the absolute, our inventory is so low.
Yeah.
It is the best time to list, and pretty much honestly list whatever you have.
Yeah.
If it's a house that, in the past, I would say get your house ready, make it look really good, and don't list until it's where you want it to be. At this point, with our inventory so low, our interest rate so low, list at the right price, and it will sell quickly.
Yeah.
Same thing if you're going to buy and you find something. Again, the low interest rate is really driving this tremendously. If you qualify and you find something, buy now, because as the inventory drops, the prices go up. So I am like actively seeking new listings, just constantly on that. And with my buyers, I'm just saying, you don't have time to think about it. Just buy it.
Yeah.
Yeah. That's where we are. It's a really, honestly, right now in July, it's hot. The market's hot.
Yeah. What is something you're excited about real estate wise, and something that you're nervous about then over the next couple of months looking forward?
Okay. So I'm excited about the fact that I think we're going to have a lot more sustainable homes coming on the market. I think sustainability is going to be huge.
From a green perspective. Which, by the way, if you guys don't know, that's like Mary's thing.
That's my thing. That's my thing. And I'm super excited about that because, you know, that's the indicator. Everybody's going to want to live in a house that is healthy and sustainable, and that's going to happen. And so I think if you're a niche investor, that's the market you should go into. What scares me is just that unknown and how we rely on an international supply chain now. So if we, our builders are going to keep building, but are they going to get the material?
Yeah, I know.
I think that's the biggest thing that scares me.
Yeah. Material prices I've heard that are going up in some segments and kind of running out or whatnot. So it's definitely interesting to see or hear that happening. Closing remarks. What do you think? We're hitting we're wrapping up just under an hour here. So I don't want to bore everybody with numbers forever, but we'll talk about where they can find all this information, but yeah, any closing remarks?
It's an exciting time in real estate.
There's a lot going on. That is true.
It's like if you're in real estate and you're an investor in real estate or you're a realtor in real estate, it's like gambling. So, man, this is like the high rollers right now.
Oh, boy. I get a little nervous if anybody's talking about what we do as a business is gambling. But, yes, there is definitely the adrenaline rush component of it.
Maybe you should cut that one.
Yeah, but I think it's true though. But the adrenaline rush component of putting a good deal together, buying something that's exciting, it's definitely there. That I don't think that's ever going to go away, right? It's right. Real estate's very exciting. So, well, Mary, where do people find you? How do they connect with you? What's the best way for somebody to reach out if they enjoyed this conversation and are like, man, I need to talk to Mary more?
So the best way is to go to my website, lovethegreen.org. And from that, you can go ahead and sign up, and I'll get your emails and be able to get back to you. And also all of my social medias, buttons, icons are there. And you can, so I put out a blog. It was being weekly during the crisis, but I've stopped that and gone back to monthly on that and real estate update. And then my YouTube channel maybe have updates more often. It just sort of depends. If something's going on, I'm like, oh, we need to talk about that.
Yeah, no, that's perfect. And your YouTube channel, I think, has all the market updates that you did.
It does.
So if somebody wants to go back and look at that specifically, you can do so. Awesome. Mary, thank you so much for the time. This was really good, super insightful conversation. So thank you for that.
Thank you for asking. And I always enjoy talking to you, Rodrigo.
Awesome. Well, take care. Everybody, thank you all so much for tuning in. As always, please share this. I think we really covered some good stuff here. So share this with a friend and pass it on. Leave us a review on Apple Podcasts, please. All right, y'all. Take care. See you guys next time.